Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FXpesa. So today we'll be talking about the top news that are currently moving the markets. We'll talk about the technical analysis part, where we focus on the major currency pairs, major stock market indices, as well as commodities. Try to understand the prevailing market patterns, and once we cover that, hopefully everyone will trade from an informed perspective. So as usual, this session does not constitute of any investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So I'll be starting with the economic calendar, looking at the key highlights for the day. And as the title of the session today says, EU equities rally on the premise of a favorable Trump tariff deal. So from the economic calendar perspective, as you can see, there is quite a number of things that we'll be expecting for the day. So today, we don't expect much on the economic calendar side. We don't have any major news. So the only key highlight event for the day will be the unemployment claims. So these are weekly data reports that shows the number of new people or number of people claiming for unemployment insurance for the first time. So as per the prior reading, we had 233K, and today we are expecting the number to slightly increase to 236K. So looking at the broader line, you notice that there has been, yes, a lot of volatility in the number, moving up and down every week. But then in the last couple of weeks, we have seen the unemployment claims reducing, which basically indicates quite a healthy job market. So from here, if you focus on the most recent weeks, right from this top here, you notice that we have had 3 consecutive weeks of declines in unemployment claims, which implies that there is less people claiming for unemployment insurance, which is indicative of a healthy job market. So in this case, what we have been seeing with the reports of a healthy job market, especially from the official non-farm payrolls, this has been pretty positive, especially for the US equities or the US stock market. And on the other hand, the dollar continues getting some hammering, moving further back downwards as investors continue expecting further rate cuts later in the year. So also, there has been what we call a sell America trade as a result of the volatility caused by Trump's tariffs. So as per last night's report from the FOMC meeting minutes, it shows that the Fed is less fearful of the Trump's tariffs. And now they're expecting inflation to continue moving according to expectations towards the 2% target. And with this kind of confidence, we expect that there will be more Fed members are voting for rate cuts on the oncoming meetings. And of course, as we all know, rate cuts are quite negative for the dollar. So other than that, we'll be having 2 Fed members speaking. One will be the FOMC member Waller at 8:15 p.m. and FOMC member Daly at 9:30 p.m. So of course, the 2 members and their speeches could share more lights on their view of the US economy and the expectations of rate decisions on the oncoming meetings. So, of course, tomorrow we'll be having even more data. Early in the morning at around 9 a.m., we'll be focusing on the UK economy, where the first major report we'll be seeing is the GDP data from the UK. And in the last month, we expect a 0.1% increase compared to the prior month, where there was a 0.3% contraction in UK GDP. So construction output is expected to have slowed to 0.2%, down from 0.9%, whereas goods trade balance is expected to have slightly improved to negative 21.1 billion pounds. This is an improvement from a worse level of negative 23.2. So as for index of services, quarter over quarter, we expect a 0.4% increase, also a slowdown from the prior reading of 0.6%. On industrial production, an improvement to 0.1% negative, which would be up from the prior reading of negative 0.6%. whereas manufacturing production is expected to have contracted by 0.1%, which is a major improvement from the prior reading of negative 0.9%. So clearly, there is an overall expectation that the UK economy may have improved in the last 1 month. So on the other hand, towards the end of the week and the end of the day, we'll be focusing on the Canadian employment change, where we expect the Canadian economy created about 900 jobs compared to the prior reading, where it had created 8,800 jobs. So this is an expectation that the labor market might be contracting in Canada, with unemployment rate expected to rise to 7.1%, up from 7.0%. Of course, worsening conditions in the job market could make it harder for the Bank of Canada to continue cutting rates, and it could make it simpler. In this case, when unemployment gets worse, central banks tend to cut rates to stimulate economic growth. So in this case, further worsening of the job market sector would likely lead to a weakening of the Canadian dollar. So now, moving on to other news that are currently moving the markets, we'll be starting with the currencies and how they are performing so far this morning. So as of this morning, the dollar, Swiss franc, and the JPY seems to be the weakest currency in the market, with the Japanese yen losing 0.04% against the dollar, whereas Asian currencies, especially the Australian dollar and New Zealand dollar, are maintaining the lead as of this morning. And this is mainly as a result of the earlier decisions by their respective central banks, where both central banks decided to hold interest rates steady, holding a bit longer before they consider further rate cuts. So in this case, they saw their currencies improving, with the Australian dollar gaining 0.32% this morning, and New Zealand dollar 0.23%. So as for the week, if you look at the performance, most currencies are not doing pretty well against the dollar. The dollar seems to have hit a major level support and it's now coming back. So besides the Australian dollar, which is up 0.15% over the dollar since the week started, all the other major currencies have lost to the dollar, with the Japanese yen taking a big hit. It's down negative 1.27% as investors consider the impact of potential tariffs by Trump on the economy of Japan, meaning that if Japan is slapped with major tariffs, then their currency might take a back step against the dollar. So also, it's a major performance this year. Looking at performance of Bitcoin over the last 1 year, so far it's up about 91.36% against the dollar. And then if you look at the year-to-date performance, Bitcoin is up 19.16%, having hit a new all-time high last night. And that's an all-time high of around $112,000 per Bitcoin. So looking at other key highlights in the markets, oil steady as traders weigh rising US stockpiles and Trump's levies. So oil steadied as traders weighed a large increase in US crude stockpiles and a wave of new tariff rates from President Donald Trump. So Brent held near $70 after closing retro changed on Wednesday, while US Texas Intermediate or US oil was around $68 per barrel. So US inventories rose by about 7.1 million barrels last week, the biggest build since January, according to official data. Stockpiles at the Cushing storage hub expanded for the first time since May. So the market continues to monitor a flurry of tariff demand letters issued by Trump, with Brazil being the latest to be slapped with high levies following threats on copper imports and other countries. The president's trade regime and vows of retaliation by targeted nations has rattled global markets. So oil is still marginally higher this week, despite a decision by OPEC Plus on Saturday to raise output more than expected in August. The group is betting on robust summer demand to help absorb the extra barrels, but there are concerns the market is facing a glut later in the year as peak consumption declines. So traders are also keeping an eye on any escalation of tensions in the Middle East after Tehran-backed Houthi militants intensified their attacks on ships in the Red Sea, sinking 2 vessels and killing sailors. The hostilities follow a conflict between Israel and Iran, which is currently subject to a fragile truce. So despite a barrage of headlines, the market seems stuck in a holding pattern, said Priyanka Sadeva, a senior market analyst for brokerage firm Nova in Singapore. So until either demand strengthens materially or supply shocks escalate meaningfully, crude may continue to drift sideways. So clearly, there is quite a number of events that are expected to be pushing markets as we head towards the end of the week. So one other key highlight is that the Bank of Japan sees US tariff hit to exports remitted for now, warns of gloom ahead. So on other highlights, Trump sets 50% tariffs on copper as well as Brazilian imports starting in August. That's the 1st of August. So US President Trump launched his global tariff assault into overdrive on Wednesday, announcing a new 50% tariff on US copper imports and a 50% duty on goods from Brazil, and both will start on the 1st of August. So, quote unquote, announcing a 50% tariff on copper effective 1st August 2025 after receiving a robust national security assessment, Trump said in a post on his Truth social media platform, reference to a Section 232 national security trade investigation into the red metal that has been underway. So the announcement came hours after he also informed, just a second, the announcement came hours after he also informed Brazil that its reciprocal tariff on August 1 would rise to 50% from 10%, shockingly high level for a country with a balanced US trade relationship. So Trump first approached the copper tariff during a cabinet meeting on Tuesday, setting off a scramble by companies to import as much copper as soon as possible from Chile and other major suppliers. He blamed the decline on the US copper industry on past administrations, saying copper was needed for semiconductors, aircraft, electric vehicle batteries, and military hardware. So, looking at the price of copper, we'll be trying to understand how the markets have responded. Of course, that will be part of our technical analysis today. So, also looking at the key highlights on financial news, I don't think we have any major red highlights. So from the first item on the updates, grid operators in Europe are facing a shortfall of 250 billion euros or 293 billion in investments. China Foreign Ministry on Trump wanting to impose 50% tariffs on copper, we oppose politicizing economic and trade issues. So I'm still just checking to see if there's any other highlights. I don't think so. As of this morning, it seems like the market is perfectly balanced to have some good technical analysis with a geopolitical taste to it, given the updates from Trump. So also looking at trading economics, some of the key highlights as of this morning are one, copper prices rise as US tariffs set to begin on the 1st of August. So as you can see, as of this morning, copper is up 2.23%. And this is a continuation of a rally that started on Tuesday. So we should be expecting to see even further performance and volatility in copper. So on the other hand, European stocks rise for fourth straight session. This is our key highlight and topic of our session today. So Norway inflation rate steady at 3% in June. Swedish monthly GDP shrinks 0.2% in May. Gold extends gains, reaching around $3,320 per ounce on Thursday, extending gains from the previous session, supported by a weaker dollar as investors continue to monitor trade developments and digest it. So Brazilian real drops as Trump imposes 50% tariff. and oil steady as traders weigh demand risks. So this seems to be the highlights as of this morning. Of course, if you look at the Brazilian real and how it has performed, so year to date, the United States dollar has been losing to the Brazilian real, having gone down by about 11.42%. But as of this week, if you look at the last 5 days, then you can see that the USD has mainly been increasing, and so far it's up 2.93% against the Brazilian real. So, looking at other major highlights, Europe reads global defense spending rise, weakening to security deficit. So, we know that NATO has been expanding its expenditure on defense, with Germany leading the way. And of course, this has led to a lot of German defense contractors gaining a lot in the stock market. So, Europe read a record international rise in defense spending last year, according to a report from the Stockholm International Peace Research Institute. So European expenses rose in real terms by 17% to around $693 million, spearheading a global rise of 9.4% to $2.7 trillion, marking the highest level of defense spending since the fall of communism in Europe. So Russia's war in Ukraine was the principal driver of the new trend, CIPRI said on Monday. The rapid spending increases among European NATO members were driven mainly by the ongoing Russia threat and concerns about possible US disengagement within the alliance. So the protagonist in that war still bore the brunt of its expense. So Russia saw the biggest annual rise of any single country at 38% as it suffered devastating material losses in its war in Ukraine. It spent about $149 billion, more than 7% of its economic output. Ukraine spent its entire tax income of $64.7 billion on its defense and was the country devoting the biggest proportion of its economy, about 34%, to the military. But apparent US reluctance to continue to fund Ukraine's defense means more of the burden may fall on Europe. So that might not be as onerous as it sounds. The size of the European Union economy meant that it needed to spend only 0.12% more of its GDP to replace military support for Ukraine, the think tank Bruegel estimated last February. Of course, we expect to see further increases going ahead later in the year. So given the strong spending happening in the EU, especially in solidifying its defense and expanding its support for Ukraine, one of the biggest German contractors in defense, company name is Rheinmetall, has seen one of the biggest gains in Europe. So if you're looking at European stocks, you might want to be interested in checking out defense contractors in the EU, mainly supporting the major economies like Germany and France. The biggest defense contractor in Germany is Rheinmetall, and this company has so far performed really well. It's up 200.23% year to date. So since the year started, the stock has tripled. So clearly, very consistent performance, not a one-day rally. And of course, with continued contracts, we expect the company to make even more gains later in the year. So of course, if you look at the last 5 days, the company is up 7.36%. So this is quite a big performance over the last 5 days. So also looking at other updates, Trump hits Brazil with 50% tariff, blasts ex-president's treatment as disgrace. I'm trying to see if there's anything I may have missed in other updates. Trump also addressed letters to the leaders of Philippines, Sri Lanka, Brunei, Algeria, Libya, Iraq, and Moldova, spreading out duties ranging from 20 to 30% that would also take percent on the 1st of August. So Brazil is not the only recipient of higher tariffs from Trump. Philippines, Sri Lanka, Brunei, Algeria, Libya, Iraq, and Moldova could also be facing some much bigger tariffs from the US. So other than that, just checking to see if there's anything else I may have missed. So far, nothing. And now we move to the US stock market side. Of course, we saw Nvidia hitting a new all-time high, and this was yesterday. So for the first time ever, and a single individual company was worth $4 trillion in market cap, and that was Nvidia hitting that for the first time in history. No other company has ever hit $4 trillion in history. And of course, we know that Nvidia slowly has been pushed ahead by the AI dominance. And of course, Nvidia is the leading provider of the top microchips in the world. So Nvidia briefly reached a market cap of 4 trillion on Wednesday, making it the first company in the world to reach that milestone and solidifying its position as one of Wall Street's most favored stocks. So shares of the leading chip designer rose as much as 2.8% to an all-time high of $164.42, benefiting from an ongoing surge in demand for artificial intelligence technologies. So the company's stock ended with a gain of 1.8%, leaving it with a market value of 3.97 trillion. So Nvidia's soaring market value underscores Wall Street's confidence in the rapid growth of AI, with the company's high-performance chips forming the backbone of its technological advance. It highlights the fact that companies are shifting their asset spend in the direction of AI, and it's pretty much the future of technology, said Robert Pavlik, a senior portfolio manager at Dakota Wealth in New York. So that's one of the key highlights as of this morning. And looking at the last update, this is mostly on the market performance since yesterday. Of course, Bitcoin tops $112,000 per Bitcoin, which is the record high, and this happened last night. So stocks moved higher on Wednesday despite ongoing uncertainty about US trade policy as AI investor favorite Nvidia briefly surpassed 4 trillion in market value, the first company ever to reach that milestone. So tech-heavy Nasdaq Composite was up 0.9%, SP 500 and Dow Jones 0.6 and 0.5% respectively. So the benchmark SP 500, which came into today's session on a two-day losing streak, after hitting a series of record high last week, crossed just shy of a new record, while the Dow is about 1% away from its first new high since December. So Donald Trump sent letters this week to more than a dozen countries, including Japan and South Korea, informing them of the tariff rates that will be imposed as of the start of August if those nations don't reduce trade barriers. Trump also signed an executive order extending the deadline for hefty reciprocal tariffs to be imposed on countries around the world from 9th July to August 1. And that was a major push ahead. So news of the extension has mitigated concerns about the immediate impact of a big increase in tariffs. Analysts say that trade levies will spark inflation and hurt economic growth, but also extends for several weeks the uncertainty about where the trade policy will land. So shares of the world's largest technology companies, which have paced the recent rally, were mostly higher on Wednesday, with Nvidia up nearly 2% higher. Chip making rival Broadcom also climbed 2%, while Microsoft, Amazon, Alphabet, and Meta platforms each rose more than 1%. Apple inched higher, while Tesla fell slightly. So, other than that, the yield on the 10-year Treasury note, which affects borrowing costs on a wide array of consumer and business loans, was at 4.34% in late afternoon trading, down from 4.42% at yesterday's close. So dollar index held steady at 97.52 level, whereas gold futures were up 0.2% at $3,025 per ounce. So those are the key highlights as of this morning, and I believe now we can jump straight into some technical analysis and try to understand where the markets might be headed next. So as of this point, I'm checking on the comment section. And good morning, Thomas Mashuma. Shout out to you for being the first person to join and comment. There's a good question. Do tariffs strengthen the dollar? So then you go bullish on USD pairs. Well, the tariffs have created a lot of uncertainty around investing in the US economy, and as a result, they have resulted in a broader aspect of Sell America. So in Sell America, what we have been seeing is bonds losing out of value, also the US dollar losing. But then the stock market has adopted a different stance called TACO, or Trump always chickens out, where major negative news announced in the tariffs, Trump seems to always track back. So after implementing over 100% tariffs on China, later on he had to draw back, reduce those tariffs. After implementing major tariffs on the world, he had to freeze all the tariffs he had implemented for 90 days. Of course, we expected the tariffs to resume on the 9th of June, of July, that was yesterday. But then what he did is that he pushed the deadline further to the 1st of August. And now you can see Trump chickening out again. And as a result, investors don't believe that the tariffs have a long-term impact on the stock market. So anytime there's a big dip, what we see is the market or investors buying the dip and driving the stock prices higher. So that may explain why we are seeing new all-time highs happening with the Nasdaq, European equities, as well as Bitcoin. So I can see Simon Gekonyo is in the house. Good morning. Daniel Kingori, Joseph Gisharu, Jeff Baraza, Maureen Kakungi. Thank you and welcome from Mombasa. Please say hi to the trading team around there. Solomon Degwa, Wangari Patrick, J Squad, thank you guys for joining. Freddie Kiprop and Andrew, thank you guys for joining. So, good question. What is your medium-term outlook on gold? I'm still very bullish on gold, given that the central bank demand is still significantly high. And if you look at the interest rates happening around major central banks, they are all mostly going down except for Japan, which has been hiking rates. So with a majority of Western central banks cutting rates, and of course yields on their bonds are also moving down, then this remains one thing, that gold is expected to outperform these bonds. So as major investors compare between potentially investing in bonds or holding their cash in gold, then it seems more likely that gold will have a much better return on investment compared to treasuries. So you can see we have a person watching from Baringo. Thank you and welcome to the session. Say hi to the traders in Baringo. So let's now shift and move on to the charts and try to understand what are the prevailing market patterns. So from the chart side, trying to share my screen here. So this is the MetaTrader 5 trading application, the app that we use for trading. So when you're using a desktop, use the MetaTrader 5. You can also use MetaTrader 4, although it's a distant past or an older version. But then if you prefer using a mobile phone, then you might consider checking out the Equity Trader by FXPesa. And when I say equity, you have to use the I in the end instead of Y. So it's not like Equity Bank, it's equity with an I, Equity Trader app. It's available on Google Play Store as well as Apple's App Store. Once you download, you sign up and you can use that for deposit, withdrawal, trading, and of course, monitoring your trades. And that will give you a one-stop solution. So from the market side, we have quite a number of things going. So I'll be starting with Japanese stock market index, the Nikkei 225 index. So from what we are seeing with this index, after a strong rally that we witnessed a couple of weeks ago, it seems like the stock market has entered some period where it's now moving sideways. So for the Nikkei stock market index, I would say that for the last 1 week and a couple of days, it's more of a sideways momentum. So worthy index to track and wait for the eventual breakout. So as for the UK stock market index, it's one of the most bullish indices as of this morning. So looking at the daily performance, you'd notice that we just broke into a new all-time high. So as mentioned, European equities are basically strongly bullish as of this morning, with the UK stock market index leading the way. So we don't have candlesticks on the left. All we are seeing is strong bullish momentum, especially for the last 3 hours. So this is evidence of a market breaking into a new all-time high and continuing to push higher as investors turn positive on the EU. Though the UK is not part of the EU, it's also considered as a European country. So their stock market index is making big news this morning. So looking at other European equity indices, I'll be starting with the German stock market index, which has been extremely bullish, hitting a new all-time high yesterday. So as you can see, we broke into a new all-time high yesterday. And today we will be looking at a potential continuation. Of course, the previous high was 24,500. So having broken above that yesterday, so it's also within expectation that the market could retest the previous high, and after retesting, continue with the original direction of the break. And given what we are seeing here, a good likelihood that today we'll be seeing an extension of the bullish momentum. So as for the Spanish stock market index, the IBEX, here we are seeing a stock market that was unable to break out of this flag formation. And now what we are seeing here is a market eventually breaking above that and now pulling back downwards. So clearly, after breaking higher, we are seeing the market pulling back with some strong momentum, though this may not be long lasting. So usually whenever you have a breakout, a retest is usually within expectation. And after we see a retest, good chance that we see a continuation in the direction of the break. And in this case, you can see it's a market that is attempting to push even higher. So having formed higher lows for the last 3 weeks, then there's a good chance that we see the market complete a pattern where it goes back to the previous high, previous all-time high, then breaches that and moves to a bit higher. So Swiss stock market index, this one as we had projected, this was back on Tuesday. We expected a jump from this lower trend line, played out as expected, and then yesterday we broke into a new high above the triangle. Today it seems like a strong continuation, and from the 4-hour time frame, it seems like the momentum could be sustained and the market continues with the recovery after the big sell-off around the month of March through to April. So for the French stock market index, the CAC 40, from the 4-hour time frame, we are reaching a high that was last seen here on the 20th of May. The bullish momentum continues, and if we breach that area, then we could be headed for a new all-time high. So good chance that the momentum continues today. And of course, the key level resistance area is around 7,951, which is the previous high. So as for the Netherlands stock market index, we also broke above a major resistance trend line here. So after breaking above that area, we have seen an acceleration in price. So we already beat last week's high, and we are looking at the previous week's high. So good chance that we see a continuation towards the end of the week to around 929.53. Whereas for the Norway stock market index, we've been talking about this gap being closed here. And so far, the market has been struggling. So the deepest pullback we have seen was yesterday. And today we expect some further recovery. And for the EU or the Euro Stoxx 50, we have seen a pretty strong bounce with a very strong bullish momentum over the last 3 days. So today being the 4th consecutive day where we're expecting the market to breach this resistance. The resistance is of the last 2 months, and if we breach this, then we could be well on course for a new all-time high. It's not very far off. So the all-time high is around 5,566. So if we breach this here today, then we'll be well on course with a target of 5566, expecting the bullish momentum in EU equities to continue. So looking at the Asian counterparts, the Hong Kong stock market index made a very strong break here on Tuesday. So we expected a retest of this area here and a continuation. So the retest was a bit deeper than expected. So here you can see how the market pulled back and then continued pressing lower yesterday. But today we seems like we are back on track with bullish momentum expected to extend to a previous high around 24,431. So for the China A50 index, what we saw here was a clean break towards the upper side. Of course, we expect that momentum to continue. So from the 4-hour time frame, you can see it has been a pretty bullish week. We expect that to be a continued momentum. So looking at the American counterparts, we'll be starting with the Nasdaq, which has been on a pretty strong bullish momentum. So we talked about the market dipping here on Tuesday and continuing towards this previous high. So on Wednesday, we go to that target, and then the market pulled back immediately. And now today, we are looking to retest the same area. In this case, the expectation that the Nasdaq retests this previous high of 22,900. So for US 500 or the SP 500, clearly we're expecting a similar kind of momentum. In this case, bull market projection. So you can see we had a pullback here from mid last week or late last week. The pullback went all the way down, and this week we have seen the market recover quite aggressively. With the biggest momentum happening yesterday. And of course, today we expect more action in the markets. And in this case, we should be looking at this area as a target around 62, 67, with the SP 500 expected to extend gains higher. So as for the Dow Jones, clearly there was a big drop earlier in the week. The market seems to have stabilized, and now we are looking at a potential range or some kind of flag formation playing out here. So we don't have a break yet. So we'll be holding a bit on this one compared to the SP 500 and the Nasdaq. So on the currency side, we know that the dollar index has been on quite some good rise. So from the 1-hour time frame, you can see the rise here, or basically the dollar recovering against major currencies. So in this case, after all this recovery, what we have witnessed here is the dollar index experiencing a major drop earlier in the day at around midnight. And now we are seeing the dollar index pulling back here. So usually, whenever you have such a break, and as I mentioned, it's common to expect the market to retest the area and then eventually move in the direction of the break. So we still expect the dollar to be pretty weak in the market. And of course, looking at Euro USD, it's basically telling us the same story. On Tuesday, we talked about the Euro USD potentially reaching this area and getting resistance and the market dropping. So it dropped earlier than expected. More of a sideways momentum yesterday, and today we are seeing a similar thing playing out. In this case, the euro gaining against the dollar, and then the dollar regaining some momentum. But eventually, you'll notice that on the bottom side, for the last 3 days, the EU has been unable to form new lows. So clearly, buyers are coming back for the Euro USD trade, and in this case, we should be expecting a potential break on the upper side. In this case, on the upper side, it implies that the Euro USD could be breaching this upper trend line and heading with a long-term bullish momentum, which we have been experiencing since January. The euro has been pretty impressive this year. Notice the strong momentum here, gaining by 14.63%. Apologies for that. So looking at other currency pairs, the pound is also expected to resume bullish momentum at some point. So far, if you look at the 1-hour time frame, clearly you can notice this has been the support area, and of course the resistance area has mainly been around this area for the better part of the week. So in this case, notice that there was really a struggle to determine a direction yesterday. So today we have hit a major resistance area. So we could continue with the pattern, or the pound could eventually break towards the upper side against the dollar. So it's a key level area to observe to see what might eventually play out in the next couple of hours, to see if there will be a potential break here. So Australian dollar, of course, resumed bullish momentum. In this case, we expect it to get to a previous high of 0.65899 or 0.659. So clearly, we expect more bullish momentum from the Asian pairs, same as the New Zealand dollar, which seems to have bottomed around this area here, having been unable to form new lows. This is over the last 2 days. And now we are seeing the market has already breached yesterday's high. And now we could be looking at the market going for around Tuesday's high. So on the other end of Asian pairs, we've had USD JPY, where the dollar really gained against the yen by breaking above this area here, pulled back and continued moving even higher. But then from the forward time frame, what we are seeing here is that any major rise in the dollar against the yen has mostly been met with more selling pressure. So of course, we know that the Bank of Japan has been on the forefront of supporting its currency. And in this case, whenever we see the dollar rising against the yen, eventually the Bank of Japan comes in and supports the yen strength. So of course, we expect more price action around the upper trend line. So even if we happen to see the market retesting this area here, the key level idea is to look for a potential trade in this direction, given that interest rates in Japan are rising and interest rates in the US are dropping. So clearly, we should be expecting something along these lines. So even though we are seeing the dollar regaining some momentum against the yen, the idea is to be looking for short selling trades. In this case, as the long-term momentum seems to be bearish. So on the commodities side, we have seen UK oil maintain a bullish trajectory despite the OPEC Plus increasing oil production. So that has seen oil markets rebound quite well. So the gap that we were seeing here has already been crossed. But then after the strong market recovery, it seems like things have stalled a bit. And if you look at the 15 minutes chart, then you can see that the market has been on a range for the last 2 days. I would say the range bottom has been around this area here, though we can extend it here. So more of a sideways momentum in oil prices. So we'll be watching for a potential break with key buyers to be on the negative side, given the increase in stockpiles in the US and of course OPEC Plus expanding production. More oil in the market implies lower oil prices. So in this case, 2 days of sideways momentum. Today we are entering the third. So potentially we should be expecting to see a break towards the lower side. So as for gold, we are seeing a pretty good and strong momentum. We have been in this range for what? For 6 consecutive days. And now we are seeing some bright price action here, implying a potential break. And once the break is confirmed, then the expectation is that we head higher towards 33.62 in what seems to be a very strong gold prices recovery. After the pullback here failed to form a new low. So this week's low is much higher than last week's, and this brings some good relief on the daily time frame. What we are seeing here is it's a bit noisy, but then clearly from yesterday's price action, today it seems we could be seeing some more continuation higher. So on the Bitcoin side, hitting a new all-time high as of this morning, or I would say last night. If you go to the 1 hour time frame, just before midnight, Bitcoin slightly hit 12,000. This was on major platforms. Here on the 15 minutes chart, you can see the big rally yesterday. Then after the rally, we are seeing some form of consolidation. So for those who identify the pattern, we'll go to a smaller time frame. This is quite a familiar price action pattern. For those who have read the Candlestick Bible and other technical analysis books, then we all know what this means. This is some form of a triangle after a strong bullish momentum. So in this case, we describe this as a pennant. And whenever you see a pennant, it's a consolidation that could appear as a continuation or a reversal pattern. So it all depends on what happens on the break. And in this case, we should be expecting a break perhaps later in the day or even tomorrow, with more likelihood that we see some continuation. So either way, breakout will give us a direction. If breakout is to the upper side, we go long. If it's to the lower side, we go short. So with more bias on the original move, which was bullish, so we'll be waiting to see on that later in the day. So that's it for the day. Thank you very much, everyone. Be checking to see if there's any questions I may have missed as I approach the end of the presentation. Also, remember to check out the latest episode of the Bullish Manta podcast. For those who are new to trading, make sure to check out the novice to pro course on FX Pesa YouTube. Remember to register for a trading account using the links in the description below. If you're watching on X, then please follow FX Pesa official and register for a trading account. Remember, this is the market snapshot. It happens every day from Monday to Friday with 4 different presenters. And in this case, with 3 different presenters. And we do it every day at 11 a.m. So keep it hooked. Subscribe to the channel so that you can get updates whenever we go live. So good question here. The continuation of price respecting the technicals in dollar pairs depends on it weakening. Do we have anything significant that would surprisingly strengthen the USD to see the technicals stall? Well, in my books, I haven't seen anything. I haven't seen anything that would likely drive the dollar higher. So unless we have any major announcements from Trump, I bet or expect to continue the dollar weakening and major pairs continuing with the same trajectory they've had since April to liberation tariffs. It was more like the liberation tariffs or liberation for these currencies, which has gained out of momentum against the USD. I can see Bryant. Thank you for joining. The request on cable technical analysis for those who are new, we are talking about the UK pound. So from the UK pound, get these highlights. We projected on Tuesday a big drop towards the lower trend line here. So Wednesday, it was more of a sideways momentum, but we didn't go for a new low. Instead, we attempted to push towards the upper side. So today being Thursday, we just got to the upper trend line, which likely shows that the market could be continuing with this channel where it just keeps on resonating from, let's say, support, gets to the resistance, and then from the resistance back to support and so on. However, this could be a change. And in this case, what I'm saying is from what we have seen with the dollar index, we had a major break this morning just after midnight. So in this case, the dollar index has been on a very strong bullish channel, but then it formed a break. Now seems to be retesting this particular trend line and could be headed much lower. So if this was to play out for the day, then it would change the perspective on the pound USD. So in this case, the pound could potentially break this upper trend line here. So the key area to watch is for the next few hours whether the pound breaches this area here, because we know for a book pattern, we'll be looking at the key level resistance areas here. So this area point, and of course the beginning of this big bearish momentum here. The big bearish momentum is from here down to this area here. So in this case, if the pound breaches this area, then it would be an easy trade going for 1.36762. But then if the pattern continues, then we remain with this bearish momentum towards 1.35, bit lower than this, 1.35158. So it all depends on the price action we see here. And from the 15 minutes chart, it's not all clear. You can see the mix up in going up, down, up, down, up, down. So it might take some time before we have a clear direction. Perhaps the New York Open will be a much clearer signal on the direction we are taking. So that's it for the day. Thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. So, question on insights on yesterday FOMC minutes. As I mentioned, the Fed members are less afraid of Trump's tariffs, so they don't expect the tariffs to have as much impact as they had earlier anticipated. And in this case, they are still hopeful or positive that they might get more rate cuts later in the year. So, more rate cuts basically means weaker dollar, strong equities. So that's the potential direction that we are expecting. So enjoy the rest of your trading day. I hope to see you on the next session.